to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of January 26, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week, Delaware mortgage rates did move higher, so hopefully you took our locking advice Monday morning. Take a look at the bond chart on the screen. You can see we had been on an upward trend, and then we sold off on Monday, sold off again on Tuesday, sold off on Wednesday, hammered out a bottom there with the green candle on Thursday. It was a nice rally back from a sell-off, and then Friday we confirmed that bounce off support with another green candle higher on Friday. So we did end the week with higher mortgage rates, but with the rally off support, we're going to recommend floating your Delaware mortgage rate to start the week to see if the bond can build on that rally off support and move the bond higher, which would move Delaware mortgage rates lower. So go ahead and float to start the week. Now, if we dig into the economic news, big news last week was the European Central Bank, the ECB, announced they would begin a massive quantitative easing or asset purchase program. They're going to purchase about 60 billion euros every month for until September 2016. That's about $1 trillion of money they're going to flood into the European economy, hoping to boost the economy and get them out of a recession. So that basically, when that move was made, it set the euro to an 11-year low against the dollar. So that helped strengthen the dollar. In other economic news, we saw China report its GDP for 2014. It came out 7.4%, which is the lowest GDP reading for China since 1990. And remember, GDP is a reading of economic growth. So they have economic growth, but it's severely slowing. So that could be a potential problem in 2015 for China, which would spill over to the world economy. So we'll keep an eye on that. The price of crude oil continues to move lower. It dropped to $45.41 per barrel. The U.S. Department of Energy said that the U.S. crude supply of oil is quickly building, and it's at a 14-year high. So with the price of oil dropping, the demand dropping, our oil supply is building up. And oil refineries are operating at 85% capacity, which is the lowest output level since 2003. So if oil prices remain low for a prolonged period of time, it will have a negative effect on housings in states like Texas that rely heavily on the energy sector for jobs. Because if the price of oil stays low, they're going to start laying people off. Production output will continue to drop. That's not good news in those states that rely heavily on energy production. Now, Thursday, we saw the release of weekly initial jobless claims come out. Came out at 307,000 claims. It was down 10,000 claims from the previous week, but that's the second week in a row we're above 300,000 claims. So that's showing a weaker trend in the labor market. So that's not good. We'll have to continue to watch that to see if it drops back down below 300,000. Now, in housing news, December 2014 housing starts were up 4.4% from November to 1.09 million units. Which is the strongest pace in single-family construction in almost 8 years. So remember, housing starts are how many new homes builders started construction on. So that's some good news from the housing market for new home construction. Housing starts were up 8.8% in 2014 over 2013 to 1.1 million units, which is the highest level since 2007. So some great news there on new home construction. Now, building permits for December 2014 dropped 2% to 1.03 million units. This is not a big drop. And typically the winter months we see a slowing in building permits, so that's no concern. It's still a very good number. So new home construction doing very well. Then we saw existing home sales for December 2014 released on Friday, increased 2.4% for November up to 5.04 million units. So that's definitely good numbers, because typically December is not one of your best months to sell homes. And for existing home sales, that's the best month since August. So it's a great read there. And if we dig into that report, it says inventory of homes for sale for December dropped 11.1% to 1.8 million units, which represents a 4.4 month supply. So that is putting an upward price pressure on homes, because less homes for sale, more buyers. That means we're turning into a seller's market. First-time home buyers represented 29% of sales in December, which is down from 31% in November, but that's up from 27% in December of 2013. The median home price increased 6% from $197,700 to $209,500. And then the Federal Housing Finance Agency released their home price index for November 2014, which showed home prices were up 0.8% from October. And this was much stronger than expected, only expecting 0.3%. Year over year, home price appreciation moved up from 4.3 4.5, sorry, to 5.3%. So that was definitely a good report there on housing. And then the National Association of Home Builders released their housing market index for January 2015. It came out at 57, which was down from 58. But anything above 50 is a sign of expansion and is good news for new home construction. So they're still feeling very good about the new home construction market moving into 2015. So that's a real-time gauge of builder sentiment in the market. So that is definitely very good. The only downside in that report was buyer foot traffic was down some in January. But we'll see if that picks up as we head into the spring. And then in the local news, the next first-time homebuyer seminar is coming up Saturday, February 21st in Newark, Delaware at the Christiana Hilton Hotel. That's from 10 a.m. to noon. And then the next one in Dover is Saturday, March 7th at the Dover Holiday Inn from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office, 302-703-0727, or register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.